At this school, money lessons happen at lunch, and balance is everything. The principal announces one rule: both sides must match, every time. That invisible line becomes law, splitting the room into two teams: debits on the left and credits on the right. On the left, the debit side, sit three types who love increases: assets, expenses, and draws. Assets are the gear holders, guarding anything valuable like its treasure. Expenses are the big consumers, using things up just to keep life running. Draws are the personal take, when the owner pulls value out for themselves. Their rule is simple: increases stay left, but decreases must step right. On the right, the credit side, sit three more who love increases: liabilities, equity, and revenue. Liabilities are the ones who track what's owed, and they never forget. Equity is the origin story, the initial stake that started the whole place and any profits or losses. Revenue is the win moment, the inflow that makes the room feel richer. Their rule mirrors the left: increases stay right, but decreases step left. Then comes the real twist: every event must hit two sides using a debit or credit, always. First test: a sale boosts revenue, so the right side celebrates the gain with a credit. But balance demands a partner, so cash appears on the left with a debit to match it. Next, the electric bill arrives. An expense rises on the left with a debit immediately. To keep the rule, cash must fall, so it moves to the right as payment with a credit. Last test: they want a new computer, but instead they borrow to get it. The computer increases with a debit, and a loan increases with a credit. When both sides move together, the cafeteria stays fair, calm, and balanced.